Hello folks, this is Eric Klein from Fraser Honeycutt Financial with our October 2014 Educational Economic Update. In this month's video, we'll be discussing a couple of the economic events that occurred last month and give you some insight into what they mean for you as an investor. Please stay tuned at the end for a required disclosure statement. October was a jittery month for financial markets, though the U.S. economy continues to do quite well. Despite slowing growth in Europe and Asia, most signs point to accelerating economic growth in the United States. Let's take a look at what happened last month. Investors got their first look at third quarter economic growth and found that gross domestic product grew at a whopping 3.5% for the 3-month period ending in September, beating economists' expectations by a wide margin. Though GDP growth decelerated from its 4.6% pace in the second quarter, it was the fourth quarter out of the last 5 that the economy has grown more than 3.5%. And let's keep in mind that this is only the first GDP growth estimate, and it will definitely see revisions. Higher or lower, we can't know until more reports come in. However, at least one major player felt good enough about economic growth to make some major policy changes. The Federal Reserve announced the end of its groundbreaking quantitative easing programs, meaning that after October, the Fed will no longer purchase new bonds to support the economy. This means that the Fed feels good enough about the economy to take off the training wheels. They will, however, hang on to their $4.5 trillion in bonds for a while longer in case the economy needs a bit more help. Digging a little deeper into the news, analysts are reading a bit of a hawkish tone to the Fed's announcements, which means that there's a risk that interest rates will rise sooner rather than later. And because the Fed feels optimistic about the country's economic outlook, some analysts think that rate hikes might come as early as spring 2015. Either way, we're confident that the Fed will look closely at all the data available before making any big decisions. Consumers are also feeling great about their economic prospects. Consumer confidence surged in October to the highest level we've seen since October of 2007. Overall, Americans are feeling much better about their job prospects and their ability to qualify for better jobs and raises. And this is great news for consumer spending and the economy going into the holiday shopping season. Third quarter earnings season kicked off in October, and now more than half of the S&P 500 companies have reported in. We have a pretty good idea of how companies did last quarter. For the 287 companies that we know about, total earnings are up 6.5% from the same period last year. Even better, revenue is up 5.1% as compared to a 4-quarter average of 3.5%. This means that demand is coming back and U.S. firms can hopefully look forward to a better revenue picture in the coming months. Looking ahead, investors will be looking carefully at earnings data and growth prospects for the rest of the year. And although third quarter earnings are looking decent, analysts are now looking forward at guidance about the fourth quarter earnings. Though the domestic growth picture is looking rosy, many firms are worrying about how slow global growth will affect their sales. And with the recent strength of the U.S. dollar against foreign currencies, it's possible that exports will fall as they become more expensive to foreign buyers. As always, we'll keep you informed. And that's it for the October Educational Economic Update. Once again, this is Eric Klein with Fraser Honeycutt Financial, signing off for the month of October 2014. If you have any questions about what you heard in this update, or would like to discuss your personal financial situation, please give us a call at 503-241-5151. We'd be happy to talk to you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.